It's that time again. The best undervalued stocks to buy now, October 2024 edition. And wow, do I have some exciting news. Last month's picks were nothing short of jaw dropping, with two stocks delivering absolutely insane returns. One of them shot up by a ridiculous 60%. That's right, 60% in just 1 month. So if you missed out, don't worry, because this month I've got three more undervalued gems that I believe are ready to soar. Trust me, you won't want to miss these picks. But before we dive into October's picks, let's rewind a bit and check out how my September stocks performed. Spoiler alert, you're going to want to sit down for this. Last month we targeted Aptiv PLC, which is on the list again for this month, Beidou Incorporated, PDD Holdings, and Schlumberger Limited. And since selecting these stocks on September 3rd, the group as a whole is up over 23%. Yes, you heard that right, 23% in just 1 month. And now for the real headliners. Beidou shot up over 30%, but the star of the show? PDD Holdings with a mind-blowing 60% surge. What a rally over the last month. If you've got Beidou or PDD in your portfolio, congrats. And guess what? Analysts still consider them strong buys, and they both still have more room to grow. But we're not here to dwell on the past. Let's talk about what's next, October's undervalued stocks. Now, I can't promise we'll see another 60% rocket ride in 1 month, but these three stocks are absolutely primed for a major breakout. Before we jump in, here's a quick reminder of the requirements I use to find these undervalued gems. We're looking for companies with a market cap over 10 billion, a PEG ratio under 1, a PE ratio below their sector average, and a price target that is at least 15% higher than their current price. I also want the stock to be within 15% of their 52-week low and have at least 10 analysts covering the stock with a consensus of buy or strong buy. Let's kick things off with a stock that made last month's list but is still seriously undervalued, Aptiv PLC with the ticker symbol APTV. Despite being down slightly in September, the metrics are screaming buy. Aptiv designs, manufactures, and sells vehicle components across North America and globally, positioning itself at the forefront of the automotive technology space. Looking at its current valuation, Aptiv has a market cap of 19 billion, a PEG ratio of 0.58, and a PE ratio that's 64% less than their sector average. It's also trading roughly only 10% above its 52-week low, making it a potentially attractive entry point. According to 16 analysts, Aptiv has a buy rating with an average price target 36% higher than its current price of $70.33. If you missed it last month, now is your second chance. Aptiv's long-term growth potential, coupled with its current undervaluation, could make it a strong addition to your portfolio. A recent article from Seeking Alpha backs up this thought, stating that Aptiv is a value stock backed by quality and growth. Next up is a payment, technology, and software solutions powerhouse, Global Payments, with the ticker GPN. The fundamentals are solid. GPN has a $25 billion market cap, a PEG ratio of 0.7, and a PE ratio that's 26% lower than its sector average, indicating that it's trading at a discount relative to its peers. GPN has a consensus buy rating among 25 analysts, and they've set an average price target that's 44% higher than the current price of $98.65. This suggests that despite recent struggles, Global Payments is well positioned for a strong recovery, with a significant upside potential for those willing to invest during the downturn. And finally, let's talk about a giant in the pharma world, Merck, with the ticker MRK. With a market cap of $278 billion, this healthcare behemoth is still undervalued despite its dominance in the industry. It boasts the lowest PEG ratio on our list at 0.32 and a PE ratio that's 45% below its sector average, indicating solid growth potential relative to its current price. Analysts love it too, with 12 analysts giving it a buy rating and a price target 23% higher than the current price of $109.77. Now let's dive a bit deeper into Merck's stock performance. Over the past 3 years, the stock has delivered a 35% return, demonstrating steady growth thanks to its strong pipeline of oncology and vaccine products. And over the last 5 years, Merck has proven itself as a long-term powerhouse with an impressive 39% return, outperforming many of its peers in the pharmaceutical space. With these kinds of numbers, it's clear that Merck has been a reliable performer both in the short and long term, and its current undervaluation offers a great entry point for investors looking to tap into the next wave of growth. So there you have it, 3 undervalued stocks primed for growth this October. Let me know in the comments, are you holding any of these stocks, or did you ride the PDD wave last month? I'd love to hear your stories. As always, thanks for watching and hanging around till the end. And don't forget to like and subscribe so you don't miss any new content. I'm here to help make content focused on your money and how to manage it best. See you in the next one.